I've seen very few listings say that they're not going to take care of the buyer side comp. You're really limiting yourself to who's going to take clients through that property. It's kind of like a free-for-all at that point. There's no organization. There's no realtors that are incentivized to bring you through. Now, realtors are having some success with having the buyer take care of their compensation. That's a whole shift in dynamic for what it's been for the past, 50 whatever years. If you can convince or let your seller know that, hey, even though things have changed, let's just stick to the way things have always been, and you'll get this house sold for quicker and for the money you want. Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm your guest, Mike Tenerelli, and with me, as always, your hosts, Tom and Mark.
I like it.
Mic drop. Done.
All right, Mark, I missed the party. We're recording this the day after the Chicago multifamily Christmas party. How was it?
It was good, man, and everybody asked about you.
That's the reason I asked the question. I want to make sure that I was missed.
No, for sure. And everyone, it's like I have to speak for you, when you're not there. Oh no, he's busy. He wanted to be here. So I totally have to answer for
Thanks,
you all the time. Yeah, for sure. So no, it's a great event. They have such a great group. They're such hustlers. They brought all the groups together. It was actually great. It was a Navigator tap room. Obviously Eric's here with GC and Cerrito Sales team. It was great.
Yeah. I love those. I love those meetups. I actually love anything where there's not a speaker. It's just you go there and mingle, and there's 10 minutes of talking, and the rest of it you just get to talk to people one-on-one.
Yeah, there's a lot of good people there. Frank Macho was there. I can't draw blanks on all the other names, but there's a lot of people that came out that I wasn't expecting to see that I got to see, and that's always nice.
Yeah. Side note: Frank never rescheduled with us. So Frank, if you're listening to this, what's going on?
He said it though. He's like, I gotta get back on your link, and we canceled on him though. I think so.
I absolutely canceled on him.
He threw a little jab in there too when I was talking to him last night. So
perfect. All right, so we're recording this now in end of December. It's January when it airs. What's 2025 looking like for GC and you?
So we're still on the hiring spree. So if anyone, property managers, directors, we're looking for more of a senior property manager as well too. So we're looking for a director of finance as well too. So we've got a lot of hires, and all kind of alongside of the growth that we're experiencing. So super excited about that. And so if anyone knows anybody, please refer. But as far as that goes, that's huge. In the personal investment side, got some lofty goals too. We can probably talk about that in a different show.
All right, we'll do that. All right, and back over to you. Housing provider tip of the week.
All right, so this continues to wreak havoc on us as a property management company. And also I hear investors call me all the time about this. If you need to get a Section 8 tenant to move out, it's nothing like a market tenant.
Yeah.
You're not going to give the 30, 60, 90, 120-day notice, wherever you're at, wherever you're going to send the proper notice, and expect them to be out. Very rarely does that ever happen. So if you are planning on selling this spring and you have a Section 8 tenant and the lease ends in March 31st, get them the proper notice. But that's something you follow up weekly, because they're going to say they're looking. And to their credit, it's tough for Section 8 tenants to go out and find houses. It's tougher for them to find it than it is for you and us. So there is a struggle for that. So if you know somebody, if you're able to help, if you're able to provide resources, you're helping your own cause if you need to get someone out. But if you're going to deliver a notice and then expect them to be out, man, you're going to be so upset.
Yeah, anything with bureaucracy does not move quickly.
Yes, for sure.
So, all right, today's guest, bring him in.
All right, man, today's guest, we got an athlete, a TV star, an investor, a tradesman, a realtor. He's done everything. And we kind of broke down how each one has played to his strengths of where he's at today and where he's going. So without further ado, Mike Tenerelli, welcome.
Thank you. Glad to be here.
Oh, man. We not only do we get a college athlete, you've been on multiple TV shows.
Toot my horn already, huh?
Oh, man. It's, I had to tell my wife, who we're sitting down with today. So what's it like to be a TV star?
Well, now that I'm I would say a D-list celebrity, I guess you can call it. It was awesome. We're talking 2013 and 2015, so it seems like it's in the rearview mirror further and further nowadays. But it was great. I mean, living like a rock star, basically. Do
you have an IMDb page?
What's that?
Do you have an IMDb page?
I don't. I don't. Yeah,
Wikipedia page?
Yeah, no. I might have a Wikipedia. I don't know. I don't look myself up, so you guys can let me know that. But in 2013, when I was on the Bachelorette, all the guys were hanging out in the mansion and everything, and one of the guys brought up, he's, "Oh, you ever heard of this new app? It's called Instagram." thinking to myself, oh no, and then I set it up right after. But that gives you a glimpse of those times. So
I told my wife about you, obviously, and she's like, I remember when she was watching the show when it was on, she asked me, she's like, do you know this guy? He looks like somebody you know.
I don't have my gold cross and everything else today, but
if you saw the three of us, you'd figure out real quickly which one was on the bachelorette. Like it's pretty obvious for those just doing the audio right now.
Oh man.
All right, so let's start here. Where investing, like where did this even come on the radar for you?
Gotcha. Yeah. So I've got a construction background, family business, family plumbing company in Wheaton. Did that for 20 years, but because I understood construction, understood what construction should cost, understood how long construction should take, I jumped into flipping in 2017. I did my first flip in Lombard. Then a year later, did another flip in Lombard, and both of them were successful. So I kind of just hit the ground running with that knowledge. Obviously, in my eyes, one of the biggest hurdles to flipping is understanding construction. So I kind of had that down, from day one. So
yep. How long did you sit there and analyze deals before making that first purchase? Like
the first purchase, I dove right in. I don't know if that's good or bad or looking back, but it worked out. But I just found something that was distressed and that, I felt like was a really cheap price. And I just said, let's do it.
I know you're a broker now. Were you a broker back then? Or
I was not a broker back then. I just got my license in 21, I believe, broker wise. So yeah, I was using a realtor that, kind of specialized in distressed stuff in the DuPage County area. So.
Okay, I know it went well, but there's got to be a lesson or two from that. What's something you take away from that first one?
Man, even nowadays, it's, it just seems like whatever you figure in your budget, I don't care what factor you add, it just seems like it goes over. I mean, unless you're adding 50% to your number, which will throw everything off and you won't do it. But it's just like everything, even back then when seems like, construction costs and construction materials were a little more under control than they are nowadays. Even then, it was just over every time. And luckily I had enough margin to absorb that.
What type of rehab did you have to do for that first one?
All of them have pretty much been just, gut rehabs, minor structural, removing some walls, things like that. Nothing major on the exteriors except for, new paint and sometimes a new roof. But usually it's just been interior guts.
Did you go in looking for that type of project, or is that just the only opportunity to present itself?
That was the only opportunity that presented itself. That was, I don't know if that was just the stuff I was looking at or not, but that was just kind of to get the value out of it. You really needed to kind of gut the whole thing. I haven't really come across many cosmetic rehabs, especially nowadays with how expensive everything is in terms of inventory and listings and all that. So.
Yeah, a lot of times it's like I'm the only guy dumb enough to take this on. That's why every time I make a purchase, that's what's going through my head. It's like
I always try to think about how many people actually saw this. When you think about this, when you see a property, especially on the multifamily, like this has been on the market for 2 years or 2 months, and now it's on LoopNet. It's like a lot of people way smarter than me already passed on this.
Yeah, like what's happening.
So it's like, gotta love it. I hear you on that.
Same feeling when you have the multiple bids. If you win a multiple bid offer, it's like, ooh,
what did I miss? Yeah.
No doubt.
Where did I mess up here?
Yeah, that kind of rings home with my construction past. It's like the jobs we were doing, low bidder always got the job. So every time I got a job, I'm like, what happened here? What line item didn't add up here?
So, all right. So we have a couple successful flips. And at this point, do you have another job, or is this is talk to us about that transition?
Yeah, so I was flipping and helping running the commercial plumbing company all at the same time. The commercial plumbing company, I've been out of there for about a year. So up until a year ago, I've been kind of doing both. So and now full time investor.
All right, and then with your license as well, right?
Yes. Yeah.
Okay. What was the turning point? I mean, it's a natural progression, but explain to us what was going through your head
with going from
why get the license.
The obvious, just why am I paying these realtor and brokerage fees when I can do it on my own type deal. So that kind of hit home after 2 or 3 flips.
Okay, cool. All right, so what happens next? We go from Lombard, because you're all over the place. You got some South Burbs. I know you did one in Berwyn. Are you looking everywhere at this point after those first 2?
So yeah, for my buy and hold inventory, I've just basically gotten those from wholesalers and other investor friends that I've become friends with. So, obviously when you start out in any type of business, I'll take what I can get. That was my attitude. So I've got five buy and hold rentals now, and yes, they are all over the place. Now that I've got the five, I'm going to really start concentrating on more DuPage, Will type county, long-term rentals. So when you start off, you're just like bright-eyed, bushy-tailed, like, yeah, let's go, Milwaukee, let's go. I'll handle it. It's just lesson learned, but I'm holding on to them and they're long-term, they're long-term wealth builders. So
I get that all the time. Oh, Milwaukee, I can shoot up there in about 45 minutes. I'm like, yeah,
no
on
big
Sunday
deal.
morning at 6. Like, you narrowed it down, kind of your future looking. Obviously, we're gonna go back in the past still, but Will and DuPage, like, what stands out for you? Why do you like that?
In my eyes, just more investor friendly than Crook, and closer to home. Just trying to, I guess when you get a little more seasoned in anything, you want things to be a little more convenient for yourself, right? So. Again, I'm not going to dump the 5 that I've got. I'm going to hold on to those and ride them out for years to come. But, now that I've dipped my toe in the water, so to speak, I'm ready to kind of re-strategize and make things a little easier on myself, hopefully.
Yeah. Talk to us a little about just analyzing those deals. Like, that's one of the hardest things I think investors have is, for someone who's doing their first deal, they don't know that area all that well. And you had some under your belt, but you're going into some of these areas like Milwaukee. Like, how do you know what's my construction price up there? What's my ARV up there? Like, just talk to us a little about like that process, because that's tough.
Yeah, Milwaukee specifically was from a wholesaler friend of mine that I used to work out with at my CrossFit gym that I used to own in Lombard. So he was a member there, and he's got 40 to 50 doors up in Milwaukee, and him and I kind of went through the numbers together. And they rang true. And again, coming with a construction background, I was able to kind of estimate what it would take to put in them. He helped me with the ARVs in that area because he's licensed in Wisconsin in terms of the MLS and everything. So I kind of leaned on him a little bit, and luckily everything kind of rang true. My cash outs went well. One of my properties in Milwaukee, one of the two, I bought for, I think it was $76,500. I didn't put a dime into it, and it appraised for $185 a couple of months ago. So I don't know how that happened. I guess sometimes you're better lucky than good, but
Yeah, do a couple of those and we're fine.
yeah, no, those are like home runs, But in terms of moving forward, I've got 2 in Milwaukee. I don't know what the future holds there. I really don't. I might just hold on to those 2 and stick to something I could actually drive to in a day, like you said, instead of a Sunday morning or whatever. It kind of takes the whole day, and there's been challenges with contractors. I've had to drive contractors from here up there just because I don't trust anybody up there because I don't know anybody up there. So we'll see. TBD on the Milwaukee project.
Well, before we go any further than that, I get asked the question all the time. All right, I was getting these conversations about people. They're always attracted to there because their prices are about half of what things go for here for the most part. Rents are about half too, so it kind of runs about what other than the lack of resources or network, what else did you like or not like about Milwaukee?
What you just elaborated on. I mean, you can get a 3-2 all brick for under $100,000 in Milwaukee. Where can you get that here? Maybe some really distressed suburbs, south suburbs here, but and then you talk about taxes and things of that nature. Also in Milwaukee, they have a big push, and I don't know if this is recent or if this has been going on for a long time, but they have a big push with residential properties that actually turn into businesses, daycares, senior care facilities, obviously very small. But a lot of homeowners are now switching to business owners, and they're able to collect a nice income. I don't know if it's from the state or where it comes from, but the rents, I have a potential for both of my Milwaukee properties to go from $1,500 a month on a residential rent to like $2,500 to $3,000 a month for a commercial rent or a business rent. So that's the draw in that area. and that's what's keeping me there, and that's what might keep me investing there. So
I probably asked you this when we went to lunch, but have you read the book Evicted?
I have not read the book Evicted. No.
You've read it, right?
Yeah, you're the one who gave it to me.
Yeah, like that. That's I
What are the
that'd
cliff
be-
notes?
that's my number one reason. If I was when we were looking to invest in Milwaukee, was just the leniency around 3-day notices, like and just how quick you get people out of court. But either way, for anyone listening, Evicted is a pretty good book of 4 case studies of Milwaukee landlord case studies.
Yep. All right, so
I guess I should read that, huh? Yeah. After the fact.
All right, so let's talk about the southern burbs too.
Yeah.
Right. So I'm assuming, like with most people, it's a price point, right? You see something down there, you get attracted to it.
Yep.
Talk to us about where are you, which villages or burbs are you in? Just talk to us about
Yep.
what's going on down there with you.
Richton Park and University Park. University Park is a condo with a very low HOA. That's the only reason why I took it on. I've got a voucher holder in that unit, which worked out well. That's probably my most profitable spread is the University Park condo. And then Richton Park I got from a wholesaler buddy of mine. So again, the University Park condo, actually, I stumbled upon just from showing it to a client of mine as a realtor, and we walked through it. He didn't like it, but then you know, you're always thinking in the back of your head, you know, could you make it work as an investor? So that's kind of how that happened. Richton Park, I'm actually just doing the cash out now. I bought it for $125. I put about 15 into it, and it appraised for $240.
Ooh, there you go.
Yeah.
Over
So
what time period? Like, how was that?
that's I bought it in April, so I was late with the cash out, but I wanted to get the roofing and siding done with a big storm that came through. So I got all that. That took forever. I didn't want to do the appraisal until all that was done, so I can get the most out of the appraisal, obviously. So that's another nice spread.
University Park, that's Will County, right?
That is the Housing Authority of Joliet. So yes, that is Will
So it's
County.
a lot easier to deal with than
Lot
if you're a couple
easier.
blocks north in Cook County dealing with HHCC. So that is probably one positive thing about being in University Park.
University Park is a nice little pocket in this particular condo complex that I have the unit in. I would probably expand there, because if I have to drive there for something and I have a few units there, then might as well check up on all of them, right? So, but yes, the housing authority there is very good, very easy to deal with. Responds all the time. The numbers are good, especially if you can get some of these condos. Like I got that condo for, I think it was 70 grand or 75 grand. So
With condos, you have to do rental license there still?
University Park, you got to do a whole application, but they make it easy. You know, the hardest part is driving there and filling it out and getting it done. Other than that,
You got to go there, right?
yeah, you have to go there.
The,
Yeah, they don't take anything electronically at that village. So, but you know, if you could, you know, start a little multi-family, I guess you can call it, with the condos, if you get maybe 5 or 10 of them, it could really be worth your while, especially with the relationship that I have with the Housing Authority of Joliet.
See, University Park, they there's a lot. It's not that there's not many like positive things, but there is more so than really people give credit to, because you do have the university there.
Governor State.
Governor State. You do have you don't have enough commercial, but there's tons of, similar to our episode we had with DeKalb. There's so much industrial going on up and down the highway there, and there's so much room to put more industrial.
Yep, and they've got that golf course there too. A really nice. I forgot what it's called, but it's right. And you're spot on. So I think it's 57 if I remember right. You get off 57, and University Park is basically right there.
Yeah.
So although it's far away mileage wise, I mean it's all highway. You know, so
You said you're into that thing for 70 grand. What's the rents, the voucher rent? What is monthly?
$1,600.
That's healthy.
$1,600, and I put $0 into it because it was completely redone before I bought it.
There you go.
You can get a condo in that complex for in the 50s, but you're gonna have to obviously.
What is taxes?
Taxes, they were, let's see, they're about $6,000 a year. Yeah.
Also
so-
insane. So there's $6 grand a year on a $70,000.
Yeah, I know, right?
So, but you know, it's crazy though.
I know.
In Park Forest right there, Forest Park.
Stay away.
Forest Park. I was confused too. Park Forest.
Those taxes are like triple University Park.
You realize those 900 square foot single family on a slab right now are going $9,000-$10,000. I saw one for $11,000 But that's because they don't have the commercial stuff. And
Correct.
That's University Park still suffers from that locally. So they do have to put more money on the residential. There's no commercial base. And that's ultimately the killer down there.
Yeah.
But I remember when I was down there was it Galewood? Yeah, Galewood. I had a 6 unit. I think it was 25 grand on something that was worth like 300.
Yeah.
Like it was like it was insane. Like
my spread on University Park is like $750 a month in terms of net profit. So, and that's including fees and management fees and HOA, everything. So that's my most profitable rental right now. That and possibly Berwyn, but also with the University Park complex, the HOA is looking for a board member. So I've been considering possibly joining that board because there's a few units there that are getting ready to get evicted. So having firsthand knowledge of that might be beneficial. Again, I got to drive down there for the board meetings and all that, but
you get in the board meeting, you go on there twice, and you get everyone to agree that Zoom is a better option.
There you go.
There you go. I think any condo that I've ever owned, I've been on the board at some point, and it's important just to make sure, especially if you have less than, and I don't know what this one breaks down to, but if you have less than 20 or 25% investors in a building, like your ass better be at those meetings to make sure that a couple idiots don't speak up and start talking about let's put a ban on rentals, let's put a cap on rentals, let's stop putting laminate flooring in there. That's like, so you got to be all over that, and then you get the insight too of who's not paying, and then you go offer them something on the side.
There you go.
So
You just convinced me to say yes to joining that board.
But I'm telling you, no one else wants to go to that meeting, so get them to do it Zoom. Like we do all of a couple of them still on. I got everyone to agree to let's just do Zoom.
Yeah.
There you go. All right. So you mentioned you got your license in 21.
Yep.
Where are you focusing on that right now, or is that just, hey, I got this for my flips? Like, how much are you actually leveraging the license?
So interesting you bring that up. I mean, we talked about it a little bit before we went live here, but my 25 goal is to actually really up my broker activity. And I feel like we talked about flips. I mean, I love a good flip here and there, but man, they've just killed me lately. Emotionally, I guess you can call it. Always over budget. If something goes wrong, I take it personal and I drive there and I'm all pissed off all the time, and I can't get the worker there on time, and his car breaks down for the 5th time, and he's sick on a Friday, and then all of a sudden he's just fine on Monday. So I'm getting really tired of that. I'm getting tired of dealing with contractors, to be honest with you, and maybe that's on me because I need to find some better ones. But you do 2 or 3 listings, and you can make the same as what you would be doing on a flip. And the positive, obviously, would be that you're not putting all your money out there, right? You're not having to manage men and women in construction, and it's just I guess less stressful way to make some money.
Yeah, no, I've said it multiple times. The flipping is so capital intensive. It's insane how much money you actually need to get one of these things across the finish line, and with that comes stress. The more money you have on the table, like
more money out there,
we were talking about it. Like that's why when you get a wholesaler, whoever's like, "Oh, the spread's so big," it's like, well, it's got to be this freaking big. Like it has to be. The risk and the money involved is just so it's so high. It's insane.
Doubt. So in terms of flips in 25, I'll take 1 or 2. They have to be home runs though. I mean, literal home runs. Otherwise, I'll just spend my time, cold calling, potential homeowners that want to list their house. I'd rather spend my energy doing that. So.
Yeah. Well, you might find a good deal that way though too, at the same time. So
exactly.
What's the network like, right? Like you've had it for a couple of years. Like how much do you have just built in from the friends and family? Like how much are you actually going out there and cold calling? Like we have a lot of brokers who listen. Everyone's looking to scale. So where are you starting at, and what are you going to do to up the game? Yeah,
so the network, obviously, the first thing I did was call my entire database on my phone. That's about 600-700 people. So that's always fun when you're trying to get a point across and you haven't talked to your college buddy in 5 years, and then you wind up having a 3-hour conversation when you're trying to work your way through your phone book. But so I did that, and so that seed is planted, so to say, and then with my office, we're big on Zillow leads and other type of internet leads, and as soon as they come in, you call, see if you can convert them. So there's that, and it's just a self-marketing business, so the better you can get yourself out there and everyone know you as Mike the Realtor instead of Mike the Plumber, which was me, that'll pay off dividends hopefully. So.
What about out there networking groups? Are you doing any of that type of stuff?
Yeah, I try to do networking groups when I can. The Chamber of Commerce's, things like that, the Wheaton Lions Club, specifically for me. And then any type of investor meetups, what have you. I try to attend those as much as I can.
Focusing in the Western burbs?
Realtor-wise, broker-wise, yeah, focusing in the Western burbs. Yeah, I'd say so. But again, I'm newer at this, so if somebody's got a place in McHenry, I'm going, because I'm hungry. So I'll take a deal and a listing or represent a buyer wherever right now. So I'm open for business.
Yeah, there you go. Shout out that phone number right now. So what do you see just overall? We haven't talked too much, since the whole NAR thing. We talked about it. We let it die. Do you see that changing? Like, do you see yourself having to convince buyers to pay your side of it? Do you see people listing starting to say, screw it, I'm not paying the buy side?
I've seen very few listings say that they're not going to take care of the buyer side comp. For the simple fact that when you don't do that as a listing agent or as a homeowner, you're really limiting yourself to who's going to take clients through that property, right? So it's kind of like a free-for-all at that point. There's no organization. There's no realtors that are incentivized to bring you through. Now, realtors are having some success with having the buyer take care of their compensation. That's a whole shift in dynamic for what it's been for the past, 50 whatever years. So the way I see it, if you can convince or let your seller know that, hey, even though things have changed, let's just stick to the way things have always been, and you'll get this house sold for quicker and for the money you want, or more money you want, hopefully. So, that's a short sample size because this has only been going on for August, I think it was. So, 3 or 4 or 5 months, whatever it's been. So I guess that's to be determined, but that's kind of the way I've seen it thus far.
Yeah, same. How about you?
It's been much the same, but I don't think so. It's really easy for much the same to happen because everyone's on the same page.
Right.
Like you listing a place, how it is to be for that buyer that's over there, and you don't want to make it difficult for yourself and for that other person.
Right.
And you offer to pay that person less on their side. It's gonna make your job more difficult to list it.
Exactly.
That's not where the threat comes in. The threat comes in from the other disruptors that all of a sudden are going to go on their list and find a way to go directly to the buyer and make the buyer feel comfortable about the process. Like that's ultimately where the change is going to come in. That is not going to, we're talking about here is that was not going to ever change. It's going to be the disruptors that's going to screw it up.
Right.
It might be a year, it might be 10 years. I don't know.
Who knows? Exactly. But, whenever things change, the way I look at it is when there's a lot of change in an industry, there's a lot of opportunities as well. So, hopefully you're just on the right side of the change and you're ahead of it.
Do you think so the other question would be, not this year, but next year. So 26 is when brokers are up for renewal. Do you think a lot of people will fall off? Do you think?
I think so. I think there's been a lot of brokers just because of the lack of activity with the interest rates. A lot of them have fallen off already, which is fine by me. Keep going.
Total volume is down like crazy over the last 2 years. I don't know these exact numbers. Somebody, I think it was Shay, gave them to me the other day, but like year over year, the last 2 years, like the number of transactions is crazy low. It is.
It's been a slow couple of years. It's based on 2 factors, and we know what they are, right? It's the interest rates and it's the low inventory, and it's that lock-in effect from COVID and from when those rates were in the 2s and 3s. So whenever that breaks, any one of those factors, I think you'll see a big pickup in activity.
Now, do you think it's a good thing or a bad thing for trying to go and find your own investments?
I think it makes it tougher. I do. I think, because even when a distressed property is up for sale, that property is a lot more expensive than it was, 5-6 years ago. So, and I know you have appreciation and things like that, but this is beyond appreciation. This is the inventory price, the low inventory pricing, I should call it. So.
Yeah, the demand is still there. Like, it's just insane. You go to get something now, and it's just, even off market, it'd be like, yeah, I had 4 other people call me. And it's like, geez, like, I thought I spent all this money to get to you directly.
Right.
And, like, everyone else is doing the same thing.
Yeah. Some of these wholesalers, they email you the property, right? And if you don't jump on it in an hour, it's gone.
Yeah,
it's gone.
that one company, like it literally, I'll see it, I'll forward to somebody, and then I sit back down my computer, it's like sold. I'm like,
Gone.
yeah, come on,
Oh,
man.
like the New Western or whatever. Yeah,
That's exactly.
I was trying not to drop names, but
That's
I
hard.
know exactly what you're talking about.
Yeah.
I think that's staged. Can we get
I know,
something from
it's
New
like,
Western
it's
here?
gotta be, it's
Like, I
gotta be.
feel
Yeah.
like that's pretty staged.
I have not bought a single property from them simply for the fact that I can't even evaluate the property in the time that it takes for it to be sold. So
I struggle. I can't I can't be comfortable that fast.
No. Nope.
And it usually comes in the morning when it's hectic. So like I've kind of written them off as being a source for me.
I can be that comfortable in my pocket. But if they had something in my neck of the woods,
Right,
Yeah.
something you know.
If it's in your
if
backyard.
it's in
Right.
my backyard, I can like boom, boom, boom.
Which
But-
is rare though,
correct.
with how big this area is. So they them and other wholesalers that, obviously they're just selling what they can find. Right. And it's just crazy. I lost a card draw one time on one of them because there were like 17 people there that wanted it. So high card won the bid. And I got like a 2 of spades, so there that goes.
Did you do that virtually, or did you have to go somewhere?
No, you were there. You were there, and you did a card draw.
I had to do a draw.
I've
straws.
never heard of that. That's
Yeah.
why don't they just call for like a best in like?
So that they wanted to be fair, and the price is the price. So it didn't get into a bidding war, which I can appreciate. But yeah, it was just everyone was locked in at a price, and there was literally 17 people there. And just handing out cards, and whoever had the high card got it. Yeah.
Did you establish our aces high or low? There could have been a lot of controversy.
Ace was high. Yeah.
I
and,
drew straws before. Like
yeah.
I literally drove. It was a HUD property, and the guy was a HUD listing agent, and we
Is
both
this real
did the
life?
exact
This
same
is
thing.
insane.
I'm
I
telling
had to
you.
be
It's
like
like thousands
2000.
of dollars on the table.
Yeah.
Like,
I was more pissed because I had to drive from Bartlett all the way downtown. It was like 300 Wacker Drive, park, go upstairs, and then like it was all over in like 30 seconds.
Yeah.
he just drew a straw.
Yeah, he's like, "Welcome, gentlemen. He's been
Yeah.
waiting for you." I was late. It was bad. So I literally walked in. And he's like, "All right, you guys ready? Here's the 2-second rule. No fighting." Like he threw out like all these. Like he's an old broker. I don't know if he's around. I don't think he's alive anymore. But I literally had to pull it. I literally said, "That sucks." And
Yeah.
he's like, "I'm sorry. Let me know if there's backup." I literally left. I was literally in there and I paid $40 for like 30 seconds of parking.
Yeah. What would have been a better story is if you would have drawn the straw.
Oh,
And
it would have been. It would have.
showed up late, gets the straw. Everyone's like,
But it-
screw this guy.
But at least we're getting some satisfaction. I guess maybe I feel
Yeah.
a little better now because we can laugh at me.
This is insane. Like this actually happened.
Yeah, it was probably 18 years later. It was a HUD Homes. So that's something that we never talk about here is the HUD Home Store website. You ever go on there?
No.
So you
Yeah, is it the same as Home Path or no? This is
No,
different.
it's different. So HUD Home Store. So you
Yeah.
have to be registered with HUD or whatever. So
Yes.
you go to HUD Home Store, and you go on there. You break it down by Illinois. You can set up searches on there too. So I recommend anyone to do that. But you bid on it. Then it's all. I'm pretty sure it's all VA properties that have failed. Now these properties are in worse shape because to go through this process usually takes a couple of years.
Oh, they've been vacant forever.
Yes.
Yeah.
So
Gotcha.
they're the rough of the rough.
Is
And
that Chicago proper only? Or,
No.
it's
or-
everywhere. You
No,
can
it's
look anywhere in the
everywhere.
country.
Okay.
Now I
Okay.
haven't been on there for a while, but I keep meaning to like put it back on my radar. For a long time there wasn't anything, just because everything was done, everything was down. So, but I heard that a bunch of stuff's popped back up on there. So anyone better check it out. Now I know GC is registered, so I have a lot of
check that
brokers that
out.
buy through us actually. So
Gotcha.
with that stuff back in the day.
Gotcha.
Wait, so they can't go over list? Like I'm still back to drawing straws. Like I can't wrap my head around this.
On the it was a messed up. So the system was really kind of, you had to submit. I think it was fax machine.
For our listeners out there that don't know what a fax machine is,
Crazy. Like the world. My first 2 years I got licensed was like you would have just thought you're in a whole nother like the MLS. You can only put 3 pictures on there.
Wow.
Actually, the first month I got it, they were still getting the books in the weekly book that came out. Like
Wow.
the MLS was horrible. Like so it was so fast. I'm like, then all of a sudden they're like, you can put 7 pictures. They're like, everyone's so happy. Like now I go on there and it's like 83 pictures. Like I don't got fucking time to go through 83
There's
pictures.
83 pictures for rentals now.
Yes, yes.
It's just like, come on.
Hey,
what
the
are we
more
doing
the
here?
merrier, right?
Yeah. What are we doing? I do want to hit on the western suburbs a little bit.
Yep.
Because I know that's your backyard.
Yep.
So pick one, a Wheaton, a Winfield, a Warrenville. Just for our listeners, someone like me who really never gets out that way, give the 2-minute breakdown of just what to expect there. Like, why do people want to live in Wheaton? What's good about it? What can you expect if you're looking to invest there?
Yeah, I mean it's the same as every prioritized or high profile town that's in high demand. It's schools, location, lack of crime, I guess you can call it, and all that combined, and Wheaton is right up there, with Glen, Ellyn, Elmhurst, all those western suburbs, certain spots in Naperville. So, in my brokerage, we're number one in Wheaton. So that's kind of why I'm happy where I'm at with that. So hopefully that brings some bottom line gains here in 2025.
What do you know, like Wheaton compared to like 2-3 years ago? Obviously, like everything's up from 2-3 years ago. Compared to like, Chicagoland median, has Wheaton seen like the same growth, more growth, steady? Like
I would say it's seen similar growth, but when you're talking about just a higher price per home, or a higher median price. So I guess when you look at it that way, it seems like it's exploding a lot more than other areas, but really it's just because that median price is so high.
You're starting at a
already.
higher number.
Yes.
What suburbs are there that still make sense to rent, to invest in? Wheaton's tough.
Wheaton's tough. I guess there's small pockets in Warrenville and Winfield. Those are like kind of smaller little towns that are still right next to Wheaton, Naperville, Glen Ellyn, things like that. But all those areas, I mean, you can't get a house, even a distressed house, for less than $300,000. So you just using the 1% rule, right? You buy a distressed for $300,000, right? You got to fix it up. You're going to spend another $50 to $100 on that. So you got to get $4,000 or $5,000 in rent. I mean, that's tough. At that point, I mean, maybe if it's a short-term rental, but at that point, why not just buy a house if you can afford that kind of rent? So that's where it really comes in. It's been tough. And is there any relief? Are we going to see prices come down? I don't think so. So it's going to be a tough road ahead to build a rental portfolio in those areas, I think.
It's crazy. I was talking last night at the event at the Christmas party. We were talking about it was Workman. He was talking about financing these $3 million new construction deals. We're talking about new construction. And it's like, how many people can actually afford that? Like, eventually you're going to run out of people that can afford a $3 million new construction. This is all city stuff, but it's a crazy way to look at some of the things that are going on with that.
See, that I disagree with. There's just from selling like these $1.5 million. There's so many people. Almost all our buyers are cash, and I'm like, who are these people? Like, there's FU money coming in all over the place that I just don't realize.
So is that just such a solid economy for such a long period of time that there's just this built up wealth that people are saying that let's do it? Like,
good question. I don't think
know.
that's the case. I don't know. I think it might be family money or something of that nature. But I mean, what do you think of the economy? Interest rates are through the roof, comparatively speaking. Okay, they're triple what they were. At the rates we got comfortable at. Energy prices are through the roof. Gas is still high. How are people making this much money and not throwing it away with living costs? But
look at COVID. There's all these case studies out now about how COVID actually helped people get richer. It was very it either crushed people or it helped them really succeed, or really take off.
It took capitalism on steroids.
Yes,
right. Like in the middle's getting destroyed.
So I feel like that is part of this, where it's like there's just a lot of people making a lot of money on the backs of some of the lower class type stuff. That we have.
I'm telling you, every time we do one of these high end ones, like the buyer on the other end surprises me every time. Mm-hmm. It's just like, wow, like that's a lot of money. Like, and also like, I don't need financing. It's like, oh, that's nice.
Must be nice.
Yeah, good for you.
Must be nice to be you.
And then we get into some negotiation over like a $2,000 thing. I'm like, come on, man.
Yeah.
Like,
I just wonder. I always think about it. Are these the red flags? And you think about 5 years from now, and it's like, oh, I remember we had that conversation one day. Like, who's going to afford this? And then all of a sudden, no one can afford it. Like,
I do agree. Like, it's the same reason. Like, I will never double my flipping business. Like, even like we found the deals. Like, I never want to have that much on the table for that reason, right? Like, it's just the table. I don't think it's ever going to fall off, but it could, right? And
it's a lot of capital out there.
Yeah, it's a lot of money, and everyone just says, you know what, we're not paying for this anymore. Like, this is not what it's worth. All of a sudden, it's all right. Like,
what's your risk? So take one of your $1.5 million projects. What's your risk if you had to hold it for 2 years? Like, what does that rental look like? So
I haven't had that.
Or do you write the check, or like to get out if you had to? Like,
I would take the $100,000 loss or whatever it was. I would just take the loss and be done with it, so I could wake up every morning and be like, all right, that's done, and it sucked. I would not want to keep holding it just slowly bleeding to death.
You have to go like the 0.10% rule.
Well, there's a guy who did one in I won't mention names, but there's a guy who did one in Logan, got caught holding it, and he rented out like it's a deconversion single family. He's getting like $8,500, so like he's losing, call it $1,500 a month, right? So if he just needs 2 years, it's like, all right, like it's like a $30,000 loss.
8,500 one renter.
Yeah. In a single family.
That to me, that blows my mind. 8,500, you could buy a
but like,
$1,000,000
I'm relocating to Chicago for a year.
Gotcha.
Right. Like
gotcha,
I'm assuming that's the
Yeah,
answer.
it's
Is
gotta
someone
be.
who
I'm a
just,
high-end guy and I don't know where I want to live, or if
Right.
I'm even going to keep this job.
or I'm
Right.
building my house.
Yeah.
And I
Right.
need to be somewhere. But
building my $3 million house.
Yeah.
so in this scenario, he's losing like $1,500 a month. So let's say he's losing $20,000 a year. If it takes him 2 years to get back to even, he lost 40. Like it's not that bad.
It's not
I mean,
stress.
it's not a great situation by
But
any
you
means.
carry a lot of stress on your shoulders.
No
You
doubt.
carry a lot on your shoulders. You do get the long-term capital gains as opposed to short-term capital gains, right? You do. I guess there's no gains, so who cares? Never mind. You're losing anyways.
Some of the decision plays into like what kind of year you had too. Like, is it smarter for me to take this 100 because I made other money? So some of that plays into that
To
decision.
get to that point though, like because I mean whatever on these flips, you got to make there's got to be a lot of money. You make a lot of money on these. Like, so you have to go through all that and then in the red. Like, it's a big drop off. Like, I don't know. There's a lot of cushion there, I feel.
Yeah.
So
That happened to me in Berwyn. We were talking about before we went live here. I bought a house in Berwyn with the intention to flip it on a really nice street in Berwyn, right by the train station, everything. A lot of old, really nice homes there. And I bought it, put way too much money into it, thinking I was going to flip it and sell it in a day. Well, I listed it, crickets. So wound up turning into a long-term rental. So hopefully 10 years from now, I can put my head down and have that mortgage paid down and realize all the gains and the positives of rental properties. So
What year was that? 'Cause, I mean, Berwyn's gone up, so I imagine you've had
this was
some.
last summer.
Okay.
Yeah, this was I bought it last February, so we're almost on a year. And then I listed it. I listed it in middle of July. So
Single family,
single family, yeah.
What type of rent you get for it?
I'm getting $3,400 a month.
Wow, so
yeah.
that's sick.
Yeah, so that made the pain go away a little bit, and I BRRRR'd it, but I didn't get all my investment back because I intended on flipping it. So
So how much do you have into it, and how much are you cash flow wise?
So I bought it for, and again, the rough numbers here, I think it was 260, and then I put like 120 into it. Okay, I had to add a central AC system because all those houses don't have them. Okay, so let's call it I was 380 into it, and I had it listed for like 450, and crickets. I lowered it a little bit, crickets. So now the $3,400 a month, I'm cash flowing like $500-600 a month after I BRRRR'd out of it. So.
How much you have into it after you BRRRR'd?
After I BRRRR'd, I think I left over like 40 or 50 grand that's still in it. So
That's not too bad, actually.
Yeah. It'll
It doesn't help you trying to do other things.
correct.
But that's not
It
too
took away
bad.
a lot of my cash and a lot of my capital for a long time. But again, 10 years from now, that mortgage will be significantly paid down. I'll have tax write-offs with that, and I'll still be cash flowing. So hopefully the rental strategy pays off.
time's the biggest asset.
Yep. Yep.
So, all right, we ready to wrap?
Ready to wrap, man.
Let's do it.
All right, Mike. What's your competitive advantage?
Competitive advantage, I'd say, would be hopefully. That tells you how much confidence I have.
I'm optimistic.
Competitive advantage, I'd say, in the flipping world would be, the construction and some good lender relationships. Realtor world would be my network, and the buy and hold world would be just knowledge from doing it and my network and the other investors that I know and do deals with. So.
For the broker world, you got a face that should be on a bus stop. Like
Yes,
that's
I'm getting ready for that, but I need capital. So,
So, all right, what is one piece of advice you would tell someone that is yet to buy their first property here in the Chicagoland area?
well, that's a good one. I would say, be diligent with your numbers. Get a GC or someone in construction that you can trust and that will hold to that number. And just go for it. One of the podcasts I follow is One Rental at a Time. And his strategy is if you can just get to 3 rental properties, you're 95% of the way there, and you're 95% ahead of the rest of the investor world. A lot of investors say they're investors, but they really just sit on the sidelines. So know your stuff, know your numbers, know your construction, but dive into it when it's time.
I don't know that one, but that is just love that philosophy. I'm in with this guy.
Yeah.
What do you do for fun?
For fun, CrossFit, spend time with my family. I got a 1-year-old, so that's changed my life completely for the better. So that, and any type of sport, outdoor activities when the time's right around here. But the hobbies have kind of gone to the wayside because my 1-year-old is my hobby now.
Yep. All right. A good book, podcast, or self-development activity you'd recommend to our listeners?
The podcast I was talking about, One Rental at a Time, is a really good one. They go into similar stuff that a lot of podcasts do, strategies and things like that. But they also go into the market and rates and what they see is happening or what they think is going to happen. So,
Besides yourself, name a valuable resource for other Chicago real estate investors.
a good lender. A good lender would be is key. You need a partner in all this. So, and understanding, especially if you're doing rentals, the BRRRR strategy, understanding what you have to buy a house for, what you're going to put into it, and knowing that you're going to get your money back, right? Because cash flow is the biggest killer in this business. So, knowing all that is key.
You got a resource?
Yeah, you got to drop a lender's name now.
A lender that I've used a lot is Lending One. They're pretty good. They're out of Florida. But they're pretty aggressive, good rates. Finance of America is another good one that I've used. I usually use 2 to 3. Those would be my top 2.
All right, awesome. Mike, thank you so much. You provide a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
Yeah, no, I'd love to network with anybody that would like. Although I'm not an expert investor by any means, it took me to reach out to a few people that I was uncomfortable reaching out to kind of learn this. So please don't hesitate. I'm more about paying it forward than anything else. So, I'm on all socials, Instagram, Facebook. I have a YouTube channel that I just started where I put some rehab videos on there and everything like that. So
Cool.
All right, we'll link to all that in the show notes.
Sure.
Chicago Fact, who are we playing for?
All right, we are playing for Samuel Fleck. And Mike, if you or me get this question right, Samuel will get a $50 gift card brought to you by Renovo Financial, the Workman team.
awesome.
All right. So I don't think we've ever done anything with Richton Park, so I picked that. There are 3 villages/suburbs that border Richton Park. Name 2 of them.
I feel like you've done this exact question.
Well, then you should get it right.
You want to go first, Mark?
So you got Park Forest.
Park Forest to the east. We talked about one of these on the show.
University Park.
University Park to the south. Nice work.
And then Homewood? No, it's not Homewood. Hazelcrest.
No, Madison to the north.
Matson.
Matson.
How about Sauk Village? Is that close?
That's east of there.
Got it.
Does not touch. And then to the west, it's like unincorporated, and then Frankfurt. It doesn't have a west border, basically, according to ChatGPT.
That's the highway.
Yeah.
All right, did we get it or no?
Yeah, you got
I guess we
3.
got it.
All
Right?
right, cool.
You
All right.
named like 4, so all we needed was 2.
All right. Samuel,
Overachiever.
you get a $50 gift card brought to you by Renovo Financial, the Workman team. So, man, Mike, thanks for coming on.
Thank you.
Tom, thanks for coming on. Listeners, if you're entertained or if we added value to you at all today, please leave us a 5-star review on iTunes and forward this to a friend. Mike, thanks. Tom, thank you as always. And
Thanks,
listeners,
guys.
we'll see you next week.